Welcome back, Noob Selling Options community. We're actually interrupting our regular programming today for an urgent emergency explainer. Look, if you've been watching the charts today, you already know exactly why we're here. The time is right now. We need to look at the market and analyze a critical shift that's happening in real time. You know, throughout market cycles, there are these very brief, fleeting windows where sentiment completely detaches from underlying value. And that creates incredibly rare entry points for those of us who are actually paying attention. So no fluff today, no drawn-out introductions. We are diving straight into the data, straight into the psychology of the market, and most importantly, straight into taking action.
16. I really want you to let that number sink in for a second. This isn't just some random data point floating around out there. This number represents the severe level of extreme fear currently gripping the entire crypto market. When we see a sentiment index reading this incredibly low, it tells us that the herd is completely frozen. They're panicking, they're actively selling off their bags at a steep loss, and honestly, they're just terrified of what tomorrow might bring. Emotion has completely taken the wheel here, and rationality has been left way behind in the dust.
Tracing this sentiment deterioration over the past month reveals an absolute cliff. I mean, think about it. Just 4 weeks ago, the market was sitting at a perfectly neutral 49. People were comfortable, they were complacent, buying the small dips, expecting the usual upward momentum. But then, the slide began. Sentiment dropped to a fearful 33 last week, plunged to 20 yesterday, and today it has completely bottomed out at 16, firmly rooted in extreme fear territory. Now, if you've been checking your portfolio over the last 24 hours and feeling a heavy dose of anxiety, well, this completely validates exactly why you're feeling that way. The entire broader market is panicking right alongside you. But, as we know around here, following the panicked herd is rarely a winning strategy. Let's dig into why that is.
Okay, let's dive into this classic piece of market wisdom. Buy when there's blood in the streets. It's so easy to say when the market is green and your portfolio is pumping, right? But it is incredibly hard to actually execute when that fear index hits 16. But here's the absolutely crucial point for us today. Historically, this specific level of extreme fear serves as a definitive, flashing green light for high-conviction, contrarian buyers. It signals capitulation, it tells us that the weak hands have folded, and the immediate selling pressure is reaching a point of total exhaustion. So, instead of joining the panic, we're going to pivot our perspective right now. We're going to stop looking at the red as a threat and start treating it as a massive opportunity. It takes discipline for sure, but this is exactly where the foundation for future gains is laid.
The panicked herd's actions are totally visible in the on-chain data, too. Crypto Stablecoin Dominance, or STABLE.D, is aggressively breaking out of its recent consolidation zone to hit 15%. And Tether Dominance specifically, USDT.D, shows an identical, aggressive spike right up to 8.882%. Both of these upward moves are smashing right through their 50-day and 200-day moving averages. Since dominance moves inversely to the broader market, what does this actually tell us? Well, it proves that investors aren't just taking a little profit off the top here, they're actively fleeing. They're dumping volatile crypto assets like Bitcoin, Ethereum, and Solana and retreating entirely into digital cash. They are seeking safety at absolutely any cost, pushing stablecoin dominance to its absolute recent limits. All of that capital fleeing to safety creates what we call dry powder. These are highly liquid assets, like all the stablecoins we were just talking about, kept on hand to deploy when real investment opportunities arise. That 15% of the total crypto market cap that's now sitting in stablecoins, that money isn't gone forever. It hasn't vanished from the ecosystem. It represents massive, hoarded, sidelined dry powder. It's an enormous pool of capital that's currently parked by fear, sure, but it is waiting to buy back into the market once the dust finally settles and the panic subsides. It represents powerful, coiled spring future buying pressure.
Which brings us to the most important question of this entire explainer. If everyone else is hoarding their cash, staring at the charts in horror, and basically hiding under their desks, how are we deploying capital today? We've gathered the macro data, we clearly see the extreme fear on the index, and we've identified the massive mountain of sideline dry powder waiting to re-enter. Now it's time to transition from the data gathering phase into the contrarian execution phase. How do we strategically put our thesis to work?
Well, here is exactly how I am personally stepping into this market. This is direct, transparent execution right from the trenches today, June 5th, 2026. While the crowd is paralyzed, I stepped in and deployed $1,318.50 into 150 bSOL. That's Blaze Staked SOL, by the way. I got in at a limit price of $8.79 with a tiny little commission fee of just 51 cents. This isn't theoretical market analysis anymore, guys. This is treating extreme panic as an absolute buying opportunity. It's stepping right into the teeth of the sell-off to buy the dip while everyone else is terrified. We're putting our capital to work precisely when the market is offering a steep, sentiment-driven discount.
Now, you might be wondering why this specific asset. Let's break down the logic behind this contrarian strategy. First off, buying bSOL secures direct Solana-linked exposure at what we are reading as a massive, fear-driven discount. But here is the real magic of this play. bSOL is a liquid staking token. That means it inherently accumulates staking rewards over time. Even if the asset price chops sideways for months or experiences even more short-term volatility, your underlying token count is steadily growing. The yield acts as this continuous buffer against market downturns. So we're not just buying the dip, we're literally compounding our positioning just by holding it while we wait for the broader market to eventually recover. We are taking paralyzed, unproductive cash and replacing it with a hard-working, productive, yields-bearing asset. It's the ultimate strategic contrast to the herd we saw earlier, who are just hoarding stablecoins and letting inflation eat away at their value.
To the whole noob selling options community watching right now, this is exactly what active, data-driven, contrarian execution looks like right in the middle of a crisis. If you want more real-time execution updates and deep dives into market mechanics just like this one, make sure to hit that like button and subscribe so you never miss an urgent explainer. But I want to end by turning the focus over to you. The fear index is at a 16, the blood is literally in the streets. Drop a comment below right now and tell me, what asset are you stepping up to buy during this crash? Let's keep the strategy discussion going down in the comments, and I will see you in the next explainer.